Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
All right, so we're talking Pinterest. Now, stock's down about 9% this year, but it's had a good run, up over 50% over the last 12 months. As user numbers have grown, Landon, they've got nearly 500 million users as of last quarter. I mean, do you guys have the data that kind of supports the move that we've seen, even though we've seen a little bit of a pullback here in 2024?
Yeah, you know, they reported a 11% beat on monthly active users, 498 million. The street was expecting 487, so they beat a little bit there. I'm sorry, it's 11% year over year. They beat the estimate by 2.2%, but the revenue per user beat on the wrong side. They disappointed by about 2.4%. So I think their problem is they're gaining users faster than expected, but they're not monetizing those users as quickly as the street would like. And, you know, to kind of put things in perspective, 80% of their users are outside the U.S., and that group accounts for 20% of their revenue. So it's a big mix. I mean, they've got to get those international, the non-U.S. users spending a lot more money on Pinterest, because that seems to be where they're growing, where they're adding names and users, but they're just not getting money from them. So that's a little bit of a concern. I will say that, you know, watching Meta's report come out and seeing Pinterest reaction to it was pretty interesting. They sold off, they bounced right back up. They're up a little bit since then. But, you know, I think people realize that there is a difference between these two companies. They're both, I guess, technically social media, but really Pinterest is more of a shopping area, more of a shopping experience than you know, Facebook and Instagram and all those. So the majority of Pinterest users actually see it as a place to shop, and so I think that's an advantage for Pinterest because their ads are not intrusive, right? I mean, if you generally speaking, ads are somewhat intrusive on Facebook, Instagram, Reels, but on Pinterest, a lot of times it's what you were searching for. It's something related. It's something you were thinking about buying. So it's actually useful. So we like to see that. We do see that, you know, web visits are up about 4% on a year-over-year basis. Obviously a good sign. It was about -3 a quarter ago. So moving in the right direction there. However, when we look at just, you know, the buzz around Pinterest on social media, it's off quite a bit, about 15% on a year-over-year basis. So we're getting a little bit of conflicting signal between some of our metrics here. And when you compare, you know, Pinterest mentions on a year-over-year basis to Facebook, you can see it's way off. Facebook's like 25%. We threw Etsy in on this chart because it's somewhat closer to what Pinterest is. And even though Pinterest is social media, it's a shopping experience. So Etsy kind of is a little bit in between these two. So, you know, I like to, you know, Pinterest, I think, is a great company. They've got a lot of upside potential, but I think they're having some problems monetizing their users, and the data that we're seeing as far as, you know, web visits versus mentions is it's not exciting to us right now. And the stock is kind of held in there since Meta's report. We know that they've got some really big potential when it comes to moves. Their last two moves were huge. So, you know, the street's going to be on edge waiting to see what these numbers are. I would say we're on the slightly bearish side of neutral, not ready to hammer puts, but just not really excited about this name yet. We've got to see some follow through where they're generating more revenue per user. They've shown us that they can get more users in there. They got to get more dollars per user.
Yeah, Landon, the user base growth is significant. The balance sheet is strong. The partnership with Google is probably going to put more eyeballs on this company, but here's the thing. It's a niche stock, and can a niche stock really attain the big widespread growth that maybe this company is looking for? Is it attainable, Landon? Because, you know, you look at or you read about it, what they focus on. It's ideas, it's recipes, it's home and style. Kevin Hinks is not their target audience, Landon. Are they ever going to get to those people? Therein lies, I think, some of the problem. Stock's down 9% year to date.
Yeah, and those people being men. I mean,
yes.
It's just... Yeah,
I didn't want to say it, but thank you.
It's half the population that they're missing out on. I mean, I'm sure plenty of men use it, but it is primarily a women's website, women's app. And that's you go back I don't know how many decades to go back to Gillette, and they finally figured that out. You got to get the other half using your product. So figure out a way, Pinterest, to get men on here, and you can double your revenue. So I'm sure they're well aware of this, and they're trying to crack that code. But so far, that's the problem, is that they're getting more users. They're just not getting more dollars per users, and they're and a lot of the growth is outside the U.S. And for whatever reason, that's just not a rich spending demographic. Now, I will say that their platform, it's niche, just like you're talking about, and it does a really good job. I mean, they get those ads in there. They serve ads that aren't intrusive. They're starting to leverage AI to get you better search results, not only in the feed, but also in the ads. And so we have very high user experience numbers for Pinterest. People love it, but then it's just how big can they get? Like what kind of growth level, what kind of growth multiple can we realistically trade this company on? Because it seems to be, and I think the fear for investors is that they've kind of tapped out as far as getting all the users who spend money, right? And if that's the case, then their multiple is going to come crashing down. So they've got to continue to attract more people and figure out a way. The key is figure out a way to get them to spend more.
Yeah, I like that you mentioned the generative AI, because they're achieving those objectives, cost cuts, using AI to better tailor to all their consumers. But then, the partnerships, I think, as Kevin mentioned, these are key. Amazon, they're going for more ad dollars there on their platform, but at the same time, Amazon, if you like something, you can click on it. It takes you to Amazon to buy it. So they're getting the partnerships there. Is that maybe the key where you can start unlocking, some more margins that get that ARPU up that you mentioned, without having to expand maybe their consumer base to, above expectations here, Landon?
Yeah, you got to take shots. I mean, I love the partnerships. You got to figure out where to get these users, where to get more revenue, and they're trying that. I mean, this is not an incompetent company. They're doing a great job. They're executing very well at what they do. It's just a matter of turning that next lever. And I think that's kind of where investors are waiting to see. Like, they've seen Pinterest go from startup to really successful, and it's capped out a little bit in terms of amount of revenue that it can get. And so that's what they're doing right now. They're figuring it out. They're getting different partnerships, and they're finding a way to increase that. And once they do, if they find that next lever, then yeah, this thing could absolutely run. I don't know what it is. They're obviously searching for it, but once they find it, if they find it, then yeah, these prices could be rearview mirror, bargains. But if they don't, and that's the fear of investors, is it's just going to take longer and longer, and eventually you get impatient, the multiple comes down, and the stock price comes down. So that's it's a long-term play, and it's just, will they be able to crack the code? So we'll see. But I will tell you that going into this earnings report, we've got a -8, which is basically neutral. You look at the last two reports, they moved really big on both of those reports. So I'm interested to see what kind of trades you got, because I know there's a lot of premium out there, and it may not be all justified going into this report based on our data.
Yeah, over the last couple of years, the moves on earnings are pretty spectacular, either up or down. So yeah, maybe some choppy trade due. All right, great stuff. Great data as always, Landon.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us.
Current expected move 12.5%.
12.5%, $4.20.